Welcome to the Small Business Tax Savings Podcast, powered by Jetro. Each week, we bring extremely valuable accounting and tax tips specific to small business owners. You will be on your way to growing your business and putting more money in your pockets. Here's your host.
Hello and welcome back to another episode. Today's topic is how do I reimburse myself from the business and when does an accountable plan come into play? Now, before we get into that, I just want to remind you that the time is running out to get $150 off our Small Business Tax Savings Summit. Remember, our Small Business Tax Savings Summit is going to be a virtual 2-day, 12-hour event where you're going to walk away rejuvenated with ideas and implementation steps to lower your tax bill immediately and pay the least amount in taxes legally possible. We're holding that summit June 14th and 15th of 2022. Now, the big thing is, though, is if you sign up before November 30th of 2021, you're going to receive $150 off. So time's running out on that. Just be sure that if you're interested in the summit, be sure to join now. Go to taxsavingspodcast.com/summit. That's taxsavingspodcast.com/summit. Again, for $150 off our Small Business Tax Savings Summit. Must sign up by November 30th. And just a reminder, any tax minimization program members, this is included. All right, let's dive deep into this topic. How do I reimburse myself from the business? And when does an accountable plan come into play? Now, we get these kind of questions or comments all the time from both listeners, clients, people part of our tax minimization program. They'll say, I paid for business items personally. How do I get those recorded in the business? Or I have some items that are both business and personal mixed. How do I report these? Should I run them through the business or should I run them personally and then reimburse myself? And again, these are things that we hear from clients and members of our program all the time. And it's just important that however we do it correctly to ensure that those reimbursements do not end up turning into income somehow if we don't do it right. So before I get started, I just want to make it very clear. If you have an expense that is 100% business related, simply run that through your business account. And then you don't have to worry about any of this. This is mainly for situations where you accidentally paid for 100% business expense personally instead of using that business account, or you have an expense that is both business and personal mixed. But again, if you have 100% business related expense, simply run that through your business bank account. This is just if you may accidentally ran it personally or it is a business and personal mix. Okay, let's dive into it. If you're operating as a sole proprietor or single member LLC, you're going to reimburse yourself differently than if you're an S corporation or a C corporation. So with a sole proprietor or disregarded entity, single member LLC, there is no need to have a formal reimbursement policy for you as the owner. You would just simply take the deduction for the business portion of an expense on your Schedule C when filing your taxes. If it's something like mileage or the home office, there's actually going to be a section directly on the Schedule C to take advantage of getting a business deduction for those. If it is something like a cell phone that, let's say it's 80% business use, you would again simply just add that to your Schedule C when filing your taxes. For those other scenarios that are not auto or home office, if you really wanted to, you could transfer money from the business account to your personal account for the business use and then take the expense that way too. But either way, you're going to make sure that you want to have it recorded on the Schedule C. Now, again, one thing to note is that if you have employees in your business, then you would want to have an accountable plan in place for the reimbursements to them. But as you as the owner, you just simply take those expenses on your Schedule C. Now, if you're operating as an S corporation or a C corporation, those are going to be handled a little differently. Remember, if you operate as an S corporation, you are an employee of the corporation. You're an employee of the corporation. And when employees spend money on behalf of the business, you reimburse them for it. And then you get a business deduction, which is totally fine. But the key thing is you have to be following IRS rules and have an accountable plan in place. So typically, when you pay an employee, you pay them wages, which are subject to both employment and income taxes. However, that is not the intention with a reimbursement. So if we want to ensure that your employees, including you as the owner, do not get hit with taxes on that reimbursement that you make to them, we need to have a properly set up accountable plan in place. So what is an accountable plan? An accountable plan is just a fancy word for reimbursement policy and expense reporting system. It allows owners and their employees to turn in expense reports to the business for reimbursement in a way that keeps those amounts, that reimbursement amount, from being counted as taxable income. Basically, it allows your business to get a deduction for the reimbursement, and the employee that submitted that reimbursement, it's tax-free to them. And the accountable plan is just a tool that you use to ensure that this is done according to law. So you might be saying, great, I know I need an accountable plan. I'm doing reimbursements to myself or employees. How do I set up an accountable plan? Now, tax rules do not require you to have a physical written accountable plan in place. However, we still always recommend it, as it makes it clear to both you and your employees, if you have employees, and in the event of an audit, it helps you make your case that much easier. So by having that accountable plan in place, it helps defend that reimbursement in the event of an audit, and it just makes it clear for you as the owner who's going to get reimbursed what needs to be done, as well as your employees, if you're using this for employees. And so when we look at the requirements by the IRS, there's 4 major requirements that they have with an accountable plan. The first one is this expense must have a business connection. So the expense must be a valid business expense that incurs in the normal course of business, just as if you were to run it through the business. So we can't take our family to a completely 100% personal trip and just say we're going to reimburse it for it, because it doesn't have that business connection. So just like any other business expense, if you're reimbursing an employee or yourself as an employee, it has to have that business connection still. The second piece is substantiation. Employees, including yourself, need to submit the required proof of the expense that they're getting reimbursed for. Think of this as like an expense report or a trip sheet or a receipt that has a bunch of details on it. And basically a receipt or other documentation is typically going to be required for expenses $75 or more, but I always say grab it on every receipt, regardless of the amount. And on that receipt, right on there, the amount, the business purpose, who you were with, the day, the time, and a description of why it's a business deduction. So number 2 is substantiation. You need to have that required proof of whatever expense is being reimbursed. Number 3 is that there cannot be any excess payment. So if there were advances or excess or reimbursements made over and above what the actual expense was, that must be returned to the company, or you're going to change that amount and record as taxable wages. So let's say you give an employee $1,000 and say, go spend this on software that you need to purchase to do your job. And they come back and they spend $700, give you the receipts for $700. We have now overpaid them $300. In order to get that item back, they need to reimburse or send that $300 back to the company, or we include it as taxable wages to them. Either or. The biggest thing here is that you can only get a reimbursement for actual amount that the item was for. And finally, the fourth key point here is timeliness. Reimbursements and substantiation, that proof, must be submitted in a timely fashion. So those are kind of the 4 requirements that the IRS requires in an accountable plan, or a fancy word again for reimbursement policy. Now, as part of our tax minimization program, we have a full section on this accountable plan, and we discuss this full setup. So if you're looking for more information, you want to have some of these details and some of these done for you items, check out our tax minimization program. Again, taxsavingspodcast.com/tax. But now here is what we typically recommend as far as the setup of an accountable plan. First, we recommend adopting a written reimbursement policy. That's going to be your accountable plan. And basically, this is just a sample document that lays out the 4 requirements that we just discussed. So adopt a written policy. That's something that we can put on file, keep on file. We don't need to send it anywhere, provide it to the IRS or anything like that. But if they come knocking and asking about these reimbursements, we have a document that we can send them to help defend that. Again, we have a sample document in our tax minimization program for this. The second piece that we do when we're setting up an accountable plan is to create an accountable plan template or an expense report. And this is basically just a tracker that can be used to help business owners calculate their reimbursements, along with an expense report that they can use for regular expenses. Basically, this is going to be that part of that substantiation. What are we getting reimbursed for, and what are the dates on it, what's the business purpose, all those items. This is going to help provide proof, again, that substantiation of that reimbursement. We have a sample accountable plan template and expense report in our tax minimization program. And then the third piece to kind of complete this reimbursement is making the actual reimbursement payment. And basically you're going to pay from your business bank account to your personal or your employee's personal bank account. Now note, if you're including this in a normal pay run, be sure that you're clearly separating the reimbursement part out from normal wages. We want to make sure that the reimbursement is not included in wages so that it's not taxable to the employee. We also want to make sure that we're keeping all original reports, receipts, documents, etc. to back that up when or if we ever need it. So those are the few things that we recommend. Adopt a written reimbursement policy, aka the accountable plan. Have a document that you can keep on file. Create an accountable plan template or expense report. That's going to help back up those items that you're getting reimbursed for. And then, of course, make that actual reimbursement payment. So you might be thinking, okay, that's great, but I really don't have anything that needs to be reimbursed. And this is where I'd say you probably do. Let's dig a little bit deeper. When we talk about maximizing deductions, we want to find things that we can find a business purpose to and make sure we're getting a deduction for them and taking advantage of that. So, kind of as we discussed, basically anything that is a valid business deduction can be reimbursed utilizing a properly set up accountable plan. And so here are some examples or things to think of when you're thinking about what could those reimbursements be. For an S Corp owner or a C Corp owner, this could be a home office. This could be an automobile that's owned by you as a business owner or your employees, not your business. So how can we get a reimbursement in an S Corp for the business owner's vehicle? This could be for office expenses. This could be travel. Again, travel could be actual travel expenses or per diem. If you're taking a per diem reimbursement. This could be for parking and tolls. This could be for business meals. You're going out to lunch with someone and you're talking business with them. That's something that you might think is personal in some situations, but if we can find a business purpose, now it's a business expense. So we might want to look at our credit card statements and see, is there anything that we paid for personally that we're like, oh wait, that was a business expense. Now we can use the accountable plan, the reimbursement policy to get reimbursed and making sure that we get a business deduction for that. Tools and equipment that you might have or bought, dues and subscriptions, licenses, your cell phone and internet, that's a big one. Training, development, things like that. So there's a lot of ideas and things that we can use in an accountable plan. Again, the key thing is that if it's 100% business, use the business account. The accountable plan is mainly for those that you accidentally paid for personally, or maybe after listening to this podcast, discovered could be business expenses and you want to take advantage of now. Or it's for items that have that business and personal mix to get a reimbursement for the business portion. All right, so what else do you need to know about reimbursements or about accountable plans? Just as a summary, as a sole prop or single member LLC, reimbursements to you as the owner do not need a formal plan. You can just take those expenses on your Schedule C. However, if you have employees, you would still want to utilize an accountable plan for any reimbursements that you're doing for the employees. As an S or C corporation owner, you're considered an employee of the business, and you're going to need an accountable plan set up if you plan to reimburse yourself for items. Without a proper accountable plan in place, the IRS could treat that reimbursement as wages. And then for tax purposes, you're going to have unintended employment taxes, income taxes, etc. that both you as the employer, as the business owner, are going to pay, but the employee is also going to face taxes on this. Now, if you have employees outside of yourself as the owner, so you have other employees outside of yourself, you can have a specific accountable plan for the owner that is different than the reimbursement policy or accountable plan for other employees. So this is key. Let's say that you as the owner want to have an accountable plan set up that reimburses yourself for a home office. But maybe your employees, you don't necessarily want to reimburse them for a home office. You can have an accountable plan specific to you as the owner that says, yes, we'll reimburse for the home office, and a separate one for your employees that indicates what you'll reimburse for them. Again, key thing is here, remember, if you have an item that's 100% business use, save the extra effort and simply run that through the business bank account. This is specifically for business items you accidentally paid for or personally, or business items you accidentally paid for personally, or items that are business and personal mix. Those items that are business and personal mix, you want to pay for personally and then use the reimbursement plan to reimburse yourself for the business portion of those. And as we get closer to year end, this is going to be something you want to ensure that you get set up and implemented to make sure that any activity that you have that could be correlated to this expense reimbursement is done prior to year end. As we discussed, we go deeper with this along with sample documents and everything else within our tax minimization program. So if you're looking to sign up, definitely check that out. It's taxsavingspodcast.com/tax. Also, as a reminder, if you're a member of our tax minimization program, the Small Business Tax Savings Summit is free to you. So just another reason to sign up for our tax minimization program. Just a quick summary. I just want to talk about the setup of the accountable plan. Again, the IRS has 4 requirements. The reimbursement has to have a business connection, must be a valid business expense. You have to provide substantiation. Your employee, whoever's being reimbursed, has to have that proof of the item that they did and why it's business related. You cannot reimburse more than what the actual amount was, and you must do this in a timely fashion. Our recommended setup is to adopt a written policy that we call the accountable plan. Then we have a template or an expense report that we use to record what is being reimbursed and provide any kind of substantiation on there. And then the final piece is making that actual reimbursement payment. So hopefully this was helpful. This is a big one that I wanted to touch on before year end because this is a great opportunity to utilize to go through, look through that spending you've done personally. Run through your personal credit card, run through your personal checking account. See if there's expenses that you might have just ran on your personal account that actually could have or do have a business purpose. Those are items we want to be looking at and say, is there any spending that I did after my money's already been taxed that I could reimburse myself for and get a pre-tax deduction for it? Can I find a business purpose to spending that I did personally, use the accountable plan, and get reimbursed for it? So definitely something to check out. If you have any questions, feel free to ask them within our tax minimization program, within our free Facebook group. If you're not a part of our free Facebook group, go to Facebook and just type in Small Business Tax Secrets. Join now and collaborate with other business owners. So I just want to thank you for listening to another episode. As we come up to year end, we're going to continue to talk about topics that you want to be thinking about as we look to close out a year. Because remember, when we think about tax planning, once the year is over, a vast majority of our savings, a vast majority of our tax planning opportunities are out the door. Now, there's still some available, but we want to make sure we're paying attention to this, especially getting things done, recorded, expensed, everything else deducted before the year's over. So thank you for listening to another episode, and I will see you guys next week.
This has been another episode of the Small Business Tax Savings Podcast from the team at Jetro. If you enjoy our weekly episodes, please leave a review on whatever platform you listen to us on and share with other business owners. If you have any questions or future topics you want to hear, email them to tax@jetrotax.com. Thanks for listening and have a great day.